All right, we're live. So welcome back to Dapp University. So today we're talking about something that's incredibly bullish for Ethereum, okay? We're talking about a lot of amazing stuff that's been happening on the Ethereum roadmap, a lot of different interest in Ethereum, the asset itself, also the technology over the past couple weeks on this channel. And today we're looking at something new, okay? We're going to look at that. We're going to answer some of your questions, look at a lot of other news updates that have happened in the space since yesterday. There's actually a lot to talk about today. Look at the cryptocurrency markets and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to become a blockchain master step-by-step start to finish, then head on over to dappuniversity.com/bootcamp. Last but not least, as always, like nothing in this video that I'm saying is designed to be financial advice, and there's lots of scammers down in the comment section below. Just ignore them. Like I'll never give you my phone number or ask you to invest with me. So we got people jumping in the chat here. We got Culture Hives, we got Automatic Beats, Alberto, Lex, Betsy, Jason, Victor, Andre, Neil, Y Edge, Newbie, THX like this. Welcome, Devor. So let's go ahead and jump into this. So we've been talking a lot on this channel. We got a lot to cover here, but I'm going to start off with this topic of discussion first, which is we've seen a lot of bullish stuff for ETH over the past few weeks. Of course, we've seen the cryptocurrency markets rebound quite a bit from their lows. I do think that the, kind of the macro low is in. We saw EIP 1559 network upgrade happen. This is a London hard fork for Ethereum that happened last week. We're now burning ETH, right? All kinds of good stuff. We're seeing more ETH locked up into ETH 2.0 staking. The Coinbase earnings report came out this past, recently, and we saw some data about this, where, ETH trading volumes actually surpassed Bitcoin trading volumes in Q2 of 2021. But now today, we do have reports of another SEC filing for Ethereum ETF or Ether ETF. Okay. And why this is such a big deal, because we've talked about, ETFs in the past have been huge for other assets as soon as they've listed this way. Okay, and now I think crypto is going to be no exception. We still have not had, a U.S.-based U.S.-based crypto ETF for Bitcoin approved just yet. That's the one people have been waiting on for a long time. We've always said, when Bitcoin ETF, because I think that gives people the opportunity to buy Bitcoin with much more ease, and also for some advantages that they might do with that ETF as opposed to buying it traditionally. We haven't gotten there yet. And so we see more and more finally do this, but now, and that's been a trend over time, but this trend now is we're starting to see Ether ETFs included, right? And more and more. Okay. So whenever you see these little data points start to plop in there like that and they come closer together, this is an indication of demand, indication of a trend that I think is going to continue and pick up. Like I said, we've seen, institutions participate in crypto markets really for the first time in a significant way over the past year or so. And the institutions have been sliding on this curve of like, okay, we're just going to be interested in crypto. We start with this Bitcoin thing and then naturally move to the next thing where you see all this adoption happening and they're looking at Ether. And some people are actually skipping Bitcoin completely and going to Ether because they inherently understand like risk reward, right? They understand utility value of a network like Ether. They see, all the people using it. A lot of these people are going to, think about these things from very traditional models of like price to earnings, in the equities markets, all this type of stuff, and looking at the fees that are being paid on top of the Ethereum network, seeing all the activity and explosion on it. And there's a lot of them are skipping Bitcoin completely and going into this, all right? And I think this is an indication of that. The fact that we're seeing, a trend here for filings for ETH ETS is a big deal. So there's lots of crazy stuff that's been happening in the Ethereum space lately, but this is just another thing to add into the mix. And I think this is all more fuel for the fire for this bullish momentum to keep going forward. Because again, I've started to lean way more confidently bullish over the past week or so. In particular, I've been talking about some of these streams. As always, we have to exercise a little bit of caution right now. I'll talk about that when we look at the charts. But that's where I stand right now. So another crazy piece of news that happened yesterday surrounding this Poly network hack. Okay, so there's some things about this that are kind of comical to me. Before I talk about this, I want to be very clear. There's some things that jump out to me as funny in this. Now, I realize that a hack or an exploit, whatever you want to call it, where people lost a lot of money and had to go through a lot of fear and panic during that time. That's not funny. I'm not trying to minimize anybody's experience with that. That's not what I'm trying to do here. If you were involved in the Poly network exploit, and lost money. The good news is a lot of it's being returned, okay? But I want to give an update on this, and there's some things that are a little bit comical about it, so you have to kind of think about it both ways. So I'm not trying to, make anybody feel bad who might have been a victim of this, but basically, the Poly Network hacker returns nearly all of the $611 million in stolen funds. So if you don't know what happened around this, I've actually got a video about it coming later on that's going to explain it in depth. But this was the biggest hack, to my knowledge, in all of crypto, okay, particularly surrounding DeFi. So what happened? Well, basically, Poly Network, what does it do? It's like a bridge. It's like a cross-chain exchange. So think about like if you want to go trade cryptocurrency in a decentralized way off of a centralized exchange. You can think of it like a DEX, right? So most DEXs, like think about Uniswap's the most popular decentralized exchange. If you're going to go trade cryptocurrencies on there, you're kind of limited to cryptocurrencies in the Ethereum ecosystem. So these would be ERC20 tokens that are powered by smart contracts on top of the Ethereum network. And basically, if you're going to swap on Uniswap, you have to go, you're just limited to what's on there. So like maybe DAI to like, Aave, for example. Those are two ERC20 tokens that you could swap. Now, let's say you wanted to trade cryptocurrencies that don't exist on the same blockchain. Let's say you wanted to trade, ETH for, Bitcoin, or like those exist on exclusive blockchains. They don't actually talk to one another. So you need some sort of cross-chain platform that does that exchange. So, because all your alternative is that you'd have to go to a centralized cryptocurrency exchange, KYC, they have to custody your funds, all that type of stuff. People want to do it in any more decentralized way. Could do it with a different tool. And we've seen projects like Thorchain come in to solve this problem. And that's exactly what Poly Network was doing. So basically, Poly Network has a way of communicating between chains, a proprietary way of doing it. Because don't forget, whenever you actually want to swap assets across two blockchains, that basically those two blockchains don't talk to one another. So you have to invent a mechanism that facilitates that cross-chain exchange. So typically how this works is you have smart contracts on either side that control the funds. So like if you want to exchange one asset for another, like you're locking assets up into one side and then releasing them on the other. And then you usually have this piece that sits in the middle that talks between the two chains and actually like relays messages across the chain. So basically the short explanation is, Poly Network uses something called keepers that do this. They're basically like, it's a combination of like server processes and smart contracts that talk to one another across the two chains. There's 4 keepers on the Poly Network. The rough explanation is basically the exploiter was able to manipulate some messages across chain and make himself the keeper and actually move the funds and control them and remove the other keepers. That's my understanding. So basically, that's what he did. He or she, whoever it was, did. And we saw it was crazy. Like people were starting to send the attacker messages on chain. Like if you go to Etherscan, you can actually, if you don't know this, you can create transactions and for the input data, you can actually encode like English messages or in any language really, but like human readable messages into the input data, and you can send those inside transactions. So if you look up, I don't have a good example right now, but basically you can see I could write a message to you, send it in a transaction, you'd see it there if you decoded the message at the bottom. So people were like sending the attacker messages. He was sending messages back. It was really crazy. People were asking for money. He was giving money away. It was absolutely crazy. Kind of a stranger than fiction type scenario. And the hacker is now, returning most of the stolen funds. So there's lots of different theories on this. Some people could think that basically he was identified and there was a deal made, you know what I mean, to avoid prosecution. I don't have all the information on that type of thing. But the good news is we are seeing some resolution to this. Again, subscribe to the channel, turn on notifications to find the full explanation of that video whenever it comes out. But we do have, a little bit of resolution here. So in terms of hackers, and cybercriminals, they are getting smarter. Okay, so this is an interesting report that I saw up today. We talk a lot about, with DeFi, exploits are going to be inevitable because of human nature. I'm not saying that they should be exploited, but I'm thinking that's what the incentives are, and you can't really change human nature, and they're going to exploit things. And how we learn from those type things, and DeFi ultimately can get stronger or use that opportunity to get stronger if people decide to take those learnings and get stronger. But there's a other side to that, which is essentially that the cybercriminals are also getting smarter too. Okay, so it's a two-sided thing. Basically, the cybercriminals are turning blockchain analytics to their advantage. All right, so basically, there's a new term here. So anti-analysis is a new tool that lets users check which Bitcoin addresses may be linked to criminal activity. So it runs on Tor and was created by one of the developers of the incognito market. So basically, the whole idea here is dark web users are creating tools that help them do these exploits in a more sophisticated way. Basically, this can help them weed out which wallets would potentially be linked to criminal activity, and help avoid traceability, which is something that people have to understand. Like, most people who are going to do exploits, if you're doing them with size, you're probably going to get found. Okay, a vast majority of people will get found. Some people are very sophisticated and won't get found, but the whole point here is you're doing things on a public ledger that is very traceable. There are ways to get around some of the traceability, some better than others. But at the end of the day, people are not very sophisticated. They have a few options. You have off ramps with KYC exchanges. All right, you could try to cash out some money on an ATM or something like that, like a Bitcoin ATM. But the problem is, we're talking about anything with the size. If you're talking like somebody steals $20 million, $50 million, $100 million, $600 million, like it's not going to be very easy to get away with something like that. And that's something that, that's one of the reasons I think that a lot of these exploits are going to be unsuccessful, is because there's so much incentive to get that money back that you're going to employ, some of the brightest people to track you down. Now, I talked before about how it's really hard on the front end to incentivize sort of white hat hackers to uncover these vulnerabilities before they get found, and that the incentives really are that they're going to get found in production many times. But there are strong incentives to recover the funds where we have a lot of intelligence to actually clean up the mess after it happens. Now, that does not that really mitigates the problem for most people, because the people who are involved in the exploits have to go through the trauma until it gets cleaned up. But that is a good side of this, because if you do an attack, then basically you're limited to either cashing out, like I was talking about, or staying in the ecosystem and trying to spend the money just with crypto. But if you're doing it in DeFi, you still have a problem of if people can trace your funds, then they may not they may just be dirty money that people won't accept for DeFi projects. So if you want to use it or spend it, sometimes people just blacklist you and not let you use the applications. So that's not very decentralized, but I mean they can do it. So let's go ahead and look at the crypto markets here. Look at questions here. So it says Tornado. Yeah, Tornado Cash. Tornado Cash is a privacy solution for Ethereum. All right, so let's go ahead and look at the charts here. So we've got Bitcoin trading back above $46,000. All right. I've been talking about how, I've been flipping more confidently bullish over the past, week or so. If you go back and watch the live streams, you can kind of track this. I've been getting more and more confident as we've been reclaiming these long-term moving averages. The next test is really seeing, can we establish ourselves confidently above his long-term moving average right here? And can we basically start using it as support? All right, because right now we've broken above it. We're kind of consolidating around this area. We're trying to make a new high here. All right, but I'm feeling pretty good. You know, it could take us a little while to do this. You know, we could come down, bounce off here, and then there's lots of paths to getting there. I'm not really in a rush because, as always, if you watch these videos, I'm not really a short-term trader. I'm honestly not a big technical analysis guy. I just try to look at these big picture indicators to determine, kind of my general sense of where things are headed. All right. So same thing for ETH price. Oops, sorry. We check on the Coinbase here. So same sort of deal. ETH's kind of all the majors are kind of very correlated right now, okay? Because ETH is consolidating around this territory, about $3,200 territory. It looks like it's trying to, make a higher high here. Yeah, I'm feeling overall pretty good. Now this, we are starting to see, continued interest in this, like interest picking back up in the space. I'm already seeing it with, YouTube analytics. I'm starting to see it with, search engine traffic, social media engagement, all that type of stuff. A lot of this really follows the cryptocurrency prices. And I think it could get crazy again. But when do I think it's going to get crazy again? Well, I think the next step on the roadmap are for lower cap coins to start really taking off. And, as soon as you start seeing people get 2, 3, 4, 5, 6, 10x plus gains, that's when the news starts to spread. And then also when the news starts to spread is when Bitcoin makes a new all-time high, or Ether makes a new all-time high, or really maybe if Bitcoin breaks like 50K or something like that, you're probably going to start to see stuff get crazy again. And usually what accompanies this is when leverage starts to get leverage interest starts to rise and stuff starts getting frothy. So one thing we can check on is the on-chain metrics. We haven't been looking at that as much on these live streams. We looked at them a lot more when stuff was kind of crazy in the first part of the year because we were trying to look at like top bottom indicators. All right. And, we haven't really needed to look for any top indicators because they've been pretty far away from the top. But we can actually look at those now. Because I'm actually curious to see what what some of the indicators say now that the prices have started to be in sort of up-only mode for a couple weeks, and we really haven't had much of a correction. So let's just check on it. Let me sign in here. See if any questions in the chat. So this is what about the crypto hacked a few days ago. So that's what I was talking about earlier. So you can watch the live stream replay later if you want to. All right, so let's check on these metrics here. All right, hold on a second. So this, all right, here we go. Okay, here it is. Let me just pull up my screen here. They've changed the interface a little bit. Okay, so looking at, net unrealized profit loss. So this is a metric that we're kind of checking on when we're looking for top indicators. All right, so this is a metric that basically compares the percentage of supply that's in profit, unrealized profit relative to unrealized loss. So basically, the short explanation is you want to watch out for blue territory and start looking at this metric in the green territory, because every time in the past we have a blue, we've been in a time of euphoria, and it's indicated a long-term top. All right, so we kissed the euphoria line when we sort of started forming this rounded top up here. We kissed it basically twice. No, I didn't even kiss it here. We kissed it here, right? We kissed it literally as the rounded top was forming for Bitcoin, okay? And after we've seen this price correction, we've got firmly down into the yellow territory, into the anxiety territory. Okay. But now we're back in belief. All right. And so we got quite a ways to go before we're in blue territories. Now, why this is actually really good for the Bitcoin price long term is we let things cool off a little bit, because the last time we were at this Nupal level, let's see, Bitcoin's at $14,000, right? $14,000, $15,000, $16,000. And now we're at this same Nupal level and we're at $45,000. So Bitcoin from here, did let's just see here. So 17, about a 4x, right, from here. So, I mean, if Bitcoin did a 4x from here, that would be significant. Now, I'm not saying the math works out that way and it's that simple, but that gives you an idea of what's possible. Whenever you let some hot air come out of the market like this, some of the froth reduce, basically it means that you've got a lot longer for that. You got a lot more headroom for things to get crazy before you get into euphoric territory. Unless the price just decides to go up in a straight line, which it could get there faster. So somebody says out in the chat, how long after registering should you get the email for the bootcamp? So you should get it immediately. Let's see here. So let's see here. How to decentralize your project governance if you're building it alone. Well, basically, you could just go ahead and create the DAO and then, bootstrap the project and then add decentralized governance once you have token holders. Even if it's just you. There's going to be a significant amount of trust in the beginning if it's just you creating the project, but that's not necessarily a deal breaker. Somebody says, so 2 questions. Thoughts on Axie Infinity? Coinbase just listed it. So I made super thoughts on the price of Axie. There's actually a pretty cool statistic on seeing how you find out about the Coinbase listings before they happen. We could talk about that in another video. But yeah, I mean, I think generally Coinbase, now that it's public, they seem to have changed how they list coins. Basically, they used to be a lot slower to list coins, but now that they're public, it seems like they're just listing a lot of stuff really fast, especially for Coinbase Pro. I think part of this is keeping up with competition of decentralized exchanges or DEXs, because, I mean, let's be honest, it's a real threat, especially when we're talking about tokens to their business. So the faster they can list coins, I mean, it just seems like their philosophy's changed. I don't know exactly what's going to happen to the Axie Infinity price based on that, but it's good. So how does EIP 1559 affect layer 2 solutions? That's a good question. So it depends on the layer 2. If you're talking about the existing ones, the optimistic rollups based solutions, I don't actually know if they implement any kind of burning mechanism on the layer 2 itself, but at the end of the day, when the transaction gets included back on the base chain, EIP 1559 will still be taken into effect. All right, I got time for one more question here, everybody, and then I got to wrap up for today. A little bit shorter stream. Somebody just does learning Ethereum translate to other platforms? So the short answer is yes. The long answer is it depends on the platform. Short answer, yes, because Ethereum is a leader in this space. So when you learn the tools for Ethereum, a lot of times these skills will directly translate to other platforms with minor differences. So if you understand Solidity, you can write smart contracts. You're going to be able to deploy that smart contract to Ethereum, Binance Smart Chain, Polygon, any of the Ethereum layer 2s, any project that has basically based, and lots of other projects are creating ways to compile your Solidity smart contracts for their blockchains as well. So the reason that there's a ton of incentives to basically adopt what's already has a ton of momentum, and Solidity has a lot of support. And so if you're learning from scratch, I highly recommend learning Solidity. It's going to be supported on a number of things. Okay. That being said, if you want to go learn a different programming language later on, you can always. It's going to be a lot faster for you to learn that after you've mastered one, and I would master the thing that's in the most demand right now, especially for a beginner. Unless you have a really good reason to learn something else, I would just stick with that. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps his videos out so the more people can learn about blockchain. You know, again, if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to hit the next step, or hey, maybe you want to take a master shortcut entirely, you know, I can show you how to become a blockchain master step by step from start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching Dapp University.